What's going on, everyone? My name is D. Anthony with EvolutionTraders.com. In this video, we're going to analyze the NASDAQ futures from the 1 hour perspective and kind of show you guys the range that we were trading in, where there was some areas of opportunity, kind of show you guys how I look at the markets each and every single day and some things that I really wait for. Again, I trade a lot of options as well as big tech stocks that are located inside the NASDAQ 100. So I'm always looking at the futures. I want to know, what are the futures doing? Because if I'm trading options, I don't want to be buying calls if the NASDAQ futures are dropping. I don't want to be buying puts if the NASDAQ futures are surging. So I try to keep that sentiment all the same, and it works out really, really well. But a couple of things that I want to highlight here and I want to show you guys, and I think that you guys should really be doing this each and every single morning, every single day coming into the trading day. So the first things that I have marked out on this chart is yesterday's highs up here, okay, including a little bit of this after hours price action. So I got the high price of yesterday sitting down at 17,737, and I've got yesterday's lows sitting at 17,516. So automatically, I know that if we're trading inside this, area, we're trading in a little bit of a zone, right? So I'll call that an inside day. So does it mean that there's no areas of opportunity to make money? Of course not. There's going to be, setups on a smaller time frame where you can kind of get in and pick your spots. But one thing that I do try to kind of always do is look at the New York session and look at that first 30 minutes off the open. So for me here in California, that's going to be between 6:30 and 7 a.m. And the reason why I'm looking at that opening 30-minute range is because that's the first 1 hour candle. Okay, so what I like to do coming into the day is kind of know, where is that opening range? Where is that first 1 hour candle? Where do we close and where do we open? So if I was to look at the first 1 hour candle here, essentially what I would do is I would drop a little bit of a price level line down here at the bottom, and I would drop a price level line at the top, okay? So now what I'm looking at is I'm going to come down into a smaller time frame, and I'm going to look at, let me just kind of zoom this in so everyone can see it. What I'm going to look at is going to be, how does price action react inside this range, okay? So what I want to notice is, are we trading below yesterday's lows? Are we trading below that first hour low? And do we confirm it? And do we have room to run if we do go higher? And if we do continue to push down underneath yesterday's lows and potentially we lose the first hour lows, then do we have potential to actually move down, okay? So if I was to zoom in here and kind of look at, let me just zoom in so we can actually see what's going on here in the first 1 hour of the day. Let me kind of zoom this over a little bit, guys. Excuse me, I'm still a little bit sick with some type of cold or congestion or something. But notice the open here, right? Let me change this drawing tool around. Notice the open, we immediately surge and we put in this high. Then we kind of pull back, we put in a new low. And if you notice here, we had a range between 17,646 to 17,685. So the narrative is this. If we do confirm, breaking the opening range high, which is that first 30 minutes after the New York session, if we confirm that new high, we can then take a long position. If we start to break down, we can take a short position. Now notice when we lost the first hour lows here at 7 o'clock right away, immediately we broke down 17,646. This is a scalper's paradise here. This is a scalper's dream. What you're looking to do is see price level get broken, and then you want to go ahead and take this for a ride. And it goes down from a price of 17,646 all the way down to a low price of 17,616. So you're picking up 25, 30 points on the way down. Now, again, how do you know that this is not going to, immediately snap back? You don't. You got to set a stop loss. You have to use a previous 5-minute candle high as a stop. You got to use a 20 SMA as a stop. You have to find an area of opportunity where you can kind of manage that risk. For me, because this is a very extreme candle, it's 55 points here, I'm probably not going to give it the full 55 point stop loss. What I'm going to do is I'm going to give it the 20 SMA here, and I'm going to tell myself if we close back over the 20 SMA or we start to aggressively breach this 20 SMA, I've got to have to get out of the play. And if I look at the range here at 55, and I tell myself, well, if I can manage to capture 20, 25 points, which is half of this range, I'm going to go ahead and take that scalp. So if you do take the break through first hour lows, let me move this down. If you do take the break through first hour lows of 17,645, you can get in on this nice move for 20, 25, almost 30 points here before it snaps back, and you would have, kind of eased yourself into some profits right away off the first 30 minutes because of the fact that you're taking that range of the candle, that 55 point range, you're kind of cutting it in half. Now, if this candle wasn't, 55 points and let's say it was 15 points or let's say it was 20 points, then we would be shooting for close to 15, 20 points to take profit, or, an easy one-to-one. In this particular situation, it never really takes out the reason why candle's high. So if you were going to give it a full 55 points, essentially you would have taken this trade here through the break of the first hour lows, and you would have been riding this all the way down into later on in the day. At one point in time here at 10 a.m. Pacific Standard Time, we were trading as low as 17,555, so almost 100 points lower. Again, even if you were trading one micro contract, you'd be looking at a $200 winner here in a matter of 3 hours worth of trade time. But again, it depends on the style of trader that you are. For me, I like things to move quickly, and I like them to move aggressively in my favor, and I like to lock in gains when I know that I have them, okay? So for me, I'm going to do one of two things. I'm going to take the first break here. I'm going to cut this range in half, and I'm going to take, 15, 20, 25 points when I get it, okay? The second thing I can do is allow this first hour lows to be broken, put in a new low, okay? Put in a new low, and then when the new low gets confirmed, notice how we bounced here perfectly. When the new low gets confirmed, that happened to be at 9:15, the candle that broke through the new low was a 23.5 point range. You could have essentially taken the following candle setup using the previous 5-minute candle high as a stop or the 20 SMA as a stop, and you could have taken this for an easy 25 points to the downside. So again, that's what I want you guys to start focusing on. When you find price action a little choppy, when you find price action, kind of hard to navigate, what you can do is just do something very, very simple, and that's mark out the previous day high, the previous day low, and then you can wait for the opening range to settle, okay? So that's between 6:30 and 7 a.m. Pacific Standard Time. That's between 9:30 and 10 a.m. Eastern Time, okay? So it's the opening 30-minute range. That's what you want to see. You want to see a high be put in. You want to see a low be put in. Everything that trades in between that high and low of that opening 30-minute range is just that. It's just range. You're not really going to get any follow-through until we start to break out of that range. And then what you need to do is correlate that with the previous day high and low. And you would obviously be looking to take profits into those supply and demand areas. Or you can use those previous day's channels as new setups as well. And you would play them the same as follow. So again, I hope this video helps you guys. I hope this is going to save you a lot of time, energy, and effort to try to, stop figuring out what the hell is going on in the market. So many times I see traders, it's the first 5 minutes, 2 minutes, 10 minutes, and they want to be taking 5, 10, 15 trades. First things first, guys, is we've got to put in an opening range. Without that opening range, again, an opening range can be a 1-minute opening range. It can be a 5-minute opening range. But for me personally, it's that first 30 minutes, it's that first hour candle of the day that really sets the tone, okay? So again, depending on the type of trader you are, for myself, I'm a scalper. I'm looking for those quick moves, but I'm not looking for 1-2 second trades. I'm looking for trades that are going to provide good areas, good foundations, good blocks, and in solid follow through. So for me personally, that's using the 1 hour time frame, and that's using to enter my trades on a 5-minute time frame. That gives the price enough time to wiggle around. That gives the price enough time to catch up or slow down, or it makes it easier for you so you're not, have your brain spinning 1,000 miles an hour trying to decipher, should you get in, should you get out, should you get out, should you get in. It slows the game down, and that's what you want to do. You want to slow this game all the way down, because the faster you're thinking and the faster you're trying to process all this information, the more mistakes you're going to make. Slow down, look at the previous day high and low, allow that first 30-minute range to kind of set it to mark, and then from there you can base those levels and try to take trades around those pockets of liquidity in between those supply and demand zones when they do breach. I hope this makes sense. If you guys want more information, you want to trade with me each and every single day live, definitely join Evolution Traders. I have one space available. We're heading into a new month here. So again, for the newer people that have joined, definitely, reach out to me once you come into the room so we can get, familiar with your style of trading, what your goals and your opportunities are, so we can, formulate a actionable trading plan for you and set some rules and some discipline in place. Because all in all, guys, all this business is managing risk. If you cannot manage risk, you're not going to be able to manage your emotions. And if you can't manage your emotions, you're definitely not going to be able to manage your risk. So it doesn't really matter the strategy. It doesn't really matter what's going on in the market or the news or FOMC or whatever. It doesn't really matter, because if you can't control yourself first and stick to a plan and manage your risk accordingly, you're going to have a very, very tough time in these markets. So again, I'll see all of you guys who decide to join on the inside. Definitely reach out to me once you guys do come in the room so we can catch up a little bit better. To everyone else on YouTube, make sure to like, comment, and subscribe, and I'll catch you guys all in the next video.